Excellent. Well, thank you, Henry and Chris, for being here. Good to see Astrid as well, and everyone who's joined us tonight for tax-efficient tips and financial planning for expats in Portugal. What you need to consider before and, importantly, after you've arrived. So before and after. We've got Henry Kent with us and Chris Gabbett, who will be presenting to you this evening. We'll get an introduction to Holborn Assets, the company's essential financial factors to consider prior to moving in the run-up to coming to Portugal. Essential advice, of course, for when you've become a tax resident here in Portugal, and investment services. Chris is here to address investment services for US connected clients and the all-important Q&A. So please get your questions into the chat and we'll make sure they all get to Henry and Chris this evening. I think Henry's kicking off the proceedings. Great to see you, Henry, after seeing you at the Expats Portugal gathering in Coimbra just recently.
Indeed. It's great to see you as well, Carl. Thanks for having us this evening. It was great going for it, wasn't it?
Really good weekend. Great
Fantastic
weekend.
event.
Yeah, and good to see people in person, in real life.
Yeah, definitely, and a great turnout as well. Definitely recommend going to the next one.
Yeah, and thank you for your
Unfortunately,
support of the event. Much appreciated.
no problem. Unfortunately, away for the next one at a wedding, so I'll be missing that one, unfortunately.
You got a great reason, and we're hoping actually that we might get a wedding from the gatherings that we have. Some of us are taken obviously already, but there may be romance, and I think we'll all get invited along to that if that happens. Anyway, we're here to talk about tax and financial planning, not wedding planning. So over to you, Henry.
No, thank you very much. So, yeah, everyone, thank you for being here. Just to sort of introduce myself, my name is Henry Kent. I'm one of the senior financial planners here at Holborn Assets. I'm a British national that's residing in Portugal. I've been living in Portugal now for, well, a bit of backstory, I've been in Portugal now for the last 2 years. Previously, I was based in Spain, in Malaga, where we have our Spanish office. But me and my family, we decided to make the move over to Portugal around 2 years ago. I'm fully qualified under the Central Bank of Ireland to provide regulated financial advice to clients across the EU, including Portugal. And I'm joined today by Chris Gabbett.
Hi, Henry.
Hi, Chris. Let's jump in. So a short introduction to Holborn Assets. For anyone that's on this webinar who have never come across Holborn or spoken with myself in the past, Holborn Assets, we are a global independent financial advisory. We specialize in providing cross-border financial advice to clients in over 100 different countries around the world. And that's via our 19 international offices, including Portugal, where I'm based. But myself and my team, we specialize in Portugal. And that's why you're hearing from me today. We're one of the largest wealth management firms or advisories. We've got an excess of $4 billion assets under management. And we've won multiple awards year on year, along with our 5-star Trustpilot review. So for anyone that's wanting to sort of potentially speak with myself or reach out, I advise having a look at sort of Trustpilot reviews beforehand and getting an insight into clients' feedback and what they're saying about myself, but also us as a company. If anyone has any questions as I'm going through, as Carl mentioned, feel free to drop them in the Q&A box. We will have a Q&A section at the end where we'll run through everything. And I'll also include a QR code where if you're scan that, you can book a meeting directly into my diary. I'm pretty proud of that QR code. So yeah, I'll keep mentioning it.
I'm looking forward to that. I remember from last time.
Perfect. So let's jump straight in. So the key financial considerations before making the move. This would be after the visa process, once you've started that, and you know that you will be sort of moving to Portugal for the long term. So the first one, and these are all areas I'd just like to add that come up in all of my initial meetings with individuals and clients who are looking to make the move to Portugal. These are the key considerations to take in. The first one is budgeting and lifestyle planning. I imagine the majority of people attending this webinar has spent time in Portugal. They've got an understanding of their expenses and what that looks like depending on where you're going to choose in Portugal. But I have had, funnily enough, 2 meetings recently with clients who had never been to Portugal and were decided that they were making the move on feedback, speaking with people, and I thought it was pretty brave. But yeah, it's understandable why, because Portugal is such a great country, but even more so for people in that position to understand what expenses will be like once you're living here in Portugal. Yes, it is. You would expect a lower cost of living to maybe what you're used to in your home countries, but it's still important to factor this in. And you need to understand for healthcare costs, potentially if you're under private healthcare, schooling, day-to-day expenses, if you're renting initially or buying, all the way down to cost of groceries. So to understand this, I always recommend 2 fantastic tools that will allow you to do that. That's Numbeo and Expatistan, which give real up-to-date live information on the cost of expenses all the way from property down to the cost of gas, petrol, and groceries as well. So this will allow you to sort of give you a rough idea of a budget, but obviously everyone's lifestyle expenses are different. That ties in quite nicely with the second part. This is pension and investment planning. Once you've got a budget and lifestyle expenses sort of breakdown, then you need to start looking at what will be providing you with income to satisfy these cost of living expenses. This may be your pensions, if for retirees, maybe investments are required as well, or maybe savings. But yeah, this will allow you to sort of gauge in regards to your outgoings to income, to understand and make sure that you have longevity while you are here in Portugal. It's important to note that many sort of tax efficient structures like ISAs from a UK perspective, TFSAs from a Canadian perspective, they're highly tax efficient from the country that you used to reside in your home country. However, they will lose their benefits once in Portugal. It's not the end of the world. There are alternative structures that do offer very good benefits, and I will tax benefits, and I'll touch on this in a bit more later in the type of equivalents that you have available. But essentially, you want to explore and understand how they will be taxed before, because there might be alternatives that can, like I said, provide you that extra bit of income or growth or less tax to go towards your budgeting and lifestyle planning. Again, review your pensions and investments as early as possible so you understand how they're going to be taxed in Portugal, and whether or not there are better alternatives that are more compliant or efficient for Portuguese residency. Early financial planning on this can reduce tax liabilities. So an example of this, obviously this is generalized. It will be required for specific advice for each and every one of you, but from an ISA perspective, they are completely tax-free from a UK or a UK tax resident. However, they will lose their benefits once you're in Portugal. So if you do delay your planning, you could potentially be putting yourself in a position for tax liabilities that are unnecessary as long as the planning is done early. So be proactive rather than reactive. I love that little saying. The third one, your property back home. Sell before or after the move. This is a big one for a lot of people that I speak with, especially individuals who are know that they're making the move abroad for good, or they may want their base back in their home country, just in case. You never know what happens if you have to return back, or you don't know if you're going to be staying in Portugal for the foreseeable. You may want to hold on to your property, and it's got that sentimental value as well. However, along with sort of savings and pensions, when you're a resident in your home country, you usually have tax exemptions such as main residence relief, which will be able to reduce your taxes down. This may be lost depending on each and everyone's circumstances. And I'm not speaking for everyone here. It depends on your personal situation, but you could potentially lose that tax exemption, your main residence relief, if you make the move to Portugal and then sell in a year that you are a Portuguese tax resident. And it's likely that Portugal will want to see taxes on that as well if you're done while a tax resident of Portugal. I think I cover this, but just to give you a sort of understanding, yeah, tax residency and double taxation, that leads me on nicely. All this planning needs to be done in a year if you are looking to do this, and if you speak with someone like myself, a qualified advisor, or an advisor back in your home country, and they advise you to dispose of assets or to save in taxes, it makes sense to dispose of assets before making the move to Portugal. There's two real ways. Well, there's more than two, but the two main ways that you can become a tax resident of Portugal is the 183-day rule. That's the general rule of thumb globally. But if you spend over 183 days in a calendar year, non-consecutively, you become a tax resident for that year. So that's one way. Second is when you move to Portugal and you can register yourself on the tax portal website, that can trigger your tax liability, and from that date you become a tax resident of Portugal. There are other nuances here, such as sort of statutory ties tests and others, but they are the two general rules of thumb to consider when becoming a tax resident here in Portugal. Double taxation agreements, this is very important, and this plays a big part in mine and Chris's planning. Under the double taxation agreement with various countries and Portugal, it can dictate how your pensions, your income, your savings are taxed. So it's important to understand the double taxation agreement. I know you don't need to sort of understand it in full, but obviously we're here to help and assist with certain parts. But to get a basic understanding of your assets, how they'll be taxed under the double taxation agreement, is important to know for your own sort of peace of mind and understanding with your planning. And then third is seek advice from a tax expert if you have any doubts, questions, or anything like that. And there's tax experts working with Expats Portugal on the Dream Team as well. So I advise reaching out to them and having a conversation if you have any questions around your personal income taxation or anything along them lines. And then fifth and finally is income structuring and timing. I've touched on this a little bit, but just to go over it, certain pension tax-free incomes, so PCLS or your tax-free income from a UK perspective, while it's tax-free from a UK perspective, Portugal don't see it as a tax-free lump sum. So if you are retiring to Portugal, you want to potentially explore whether or not it makes sense and you're at normal retirement age to take that PCLS or that tax-free lump sum before. ISAs, while they're completely tax-free from a UK perspective, they lose them benefits once you're in Portugal. So to review whether or not any planning is required before becoming a tax resident in Portugal. And then the main residence relief, that could potentially be lost as well. So income structuring and timing is key before making the move to save yourself in any potential tax liabilities. Is that all okay, Carl?
Very good. Yep. Thank you. And yeah, keep the questions coming. We've got one from Kurt so far. Thank you for that, Kurt. A great question. That will be of benefit for others to hear the answer to. But yeah, keep them coming in the chat if you will. Thanks, Henry.
Perfect. Fine. So that's pretty much everything that comes up in or the main topics of initial conversations that I have with individuals who are looking to make the move to Portugal. But now moving on. So once you've been on that plane, you're here in Portugal, you're settled. What are the key considerations for once you're a resident in Portugal? The renting versus buying is to start us off. This is a big topic of debate that always comes up. Personally, I'll speak from my personal experience. We decided to rent initially for 12 months to get our feet on the ground. We spent a bit of time in Lisbon, done some scouting missions. Myself, my partner, we decided that Lisbon wasn't the right location for us. And then my colleagues here in the Algarve, where we have our office, convinced me to make the move down here. So that's where we've been based. Loving it now, but nearly every other weekend we're out and about, we're exploring, looking at where we see ourselves staying, and then towards the end of the year we're going to look to purchase. But that's just my situation, my preference. Obviously, I have individuals, clients who find that home before making the move and decide that's it, and they purchase. So it depends on your personal preference. There are sort of taxes associated with a property purchase that can sort of creep up into higher single digit figures. Breaking down whether or not what your plans are you settled? Do you know exactly where you want to go? If not, then maybe consider renting for the first 12 months like we've done. Do some sort of exploring, spend a bit of time in various places, and then potentially decide on where you want to purchase. And I know Expats Portugal and Kippetree, they've been doing a fantastic job with the property purchases. So if you are wanting to explore properties, I recommend reaching out to Astrid and the team over at Kippetree there for that as well. Second, do you need an accountant in Portugal? I found this out very quickly. Yes, you do. When you have foreign source income, a foreign language that I'm nowhere near fluent with as well, and then double taxation agreements also. I'm using an accountant. It doesn't need to be one of these sort of big tax optimization specialists, but just an accountant, tax advisor will help you and assist with tax returns, how to structure your personal income, and each source and doing it correctly. Yeah, I definitely recommend using an accountant. And I know I've touched on tax a little bit a few times. While I'm a financial advisor and I provide some degree of tax advice, this is more taxation on your savings, your investments, and how to structure them to be the most tax efficient in Portugal. Personal income tax is not something that we help with in-house. Obviously, we have preferred partners and the dream team as well at Expats Portugal. But yeah, an accountant and tax advisor, I would definitely recommend using myself. Third, currency exchanges and transfers. We've seen this come up a lot recently, and Chris, I imagine, will touch on this in a little bit later. But a lot of our US connected clients, as you may well know, the dollar has taken a considerable beating and drop since the beginning of the year. And this has had a detrimental effect on clients' income and transfers who were reliant on US dollar. So to plan for currencies, whether that's through your portfolio to have multi-currency and diversification, but also transfers as well. Using companies like Wise and Revolut for small transfers are great, but I found that working with companies like Spartan, who are fully regulated, and you have a representative that you can speak to, and they can provide advice and strategies for that, is worth its weight in gold, especially when using high street banks. You get usually a poor exchange rate, and sometimes there's underlying fees or costs that you're not aware of. So you end up losing out a considerable amount over the medium to long term. So using these type of companies will help you save money, strategize, and then also from an investment perspective that we'll touch on a little bit later, diversification. So you're not solely reliant on one currency, so you don't fall into this this situation that we're seeing a lot of individuals reaching out to us at the moment are in. And then for the role of a financial advisor, my role is to help navigate potentially yourself, but my clients with their pensions, making sure they're structured in the most tax efficient way, or if an advisor and the home country will no longer work with them, once you're abroad, we'll be able to facilitate and assist there. Making sure your savings, your investments are maximized, whether that's fixed interest investments that we have availability to, but also market-related investments to make sure that your investments are potentially structured in the most tax-efficient way to save you and your tax being in Portugal. And then finally, estate planning. Portugal has different rules to what you may be used to from inheritance. So estate planning is essential. And then what we've just touched on is the currency risk, but making sure essentially that you are compliant, you're tax efficient, and you're structured correctly for Portugal is essentially what I'll be able to assist and help you with there. I've done quite a bit of talking, so I'm just going to cover one very popular investment structure that a lot of people who may have been moving to Portugal or in Portugal and been searching about sort of investment opportunities as an expat or reducing your tax, you may have seen the name the Portuguese Compliant Investment Bond. Essentially, it's a highly tax efficient structure which is compliant with Portuguese law that combines growth and tax benefits the longer you hold it. It's basically a wrapper similar to an ISA, like I touched on earlier, or TFSAs or these other type of investment wrappers, but essentially it's suited for Portugal and Portuguese taxation. It's usually popular among expats because you're able to hold US dollar, euro, and sterling. So it means that if you are moving to Portugal, but you don't want to convert all of your funds to euros, or you want a sort of diversification like we've touched on earlier, then these type of structures can satisfy them requirements. They're usually held outside of Portugal, usually Ireland, Dublin, or Luxembourg. Reason for that is they're highly regulated, they're secure jurisdictions, and they have some of the best levels of investor protection in the world. So unlike sort of banks here in Portugal that lend out your funds for interest rate purposes, institutions in Ireland, they ring fence all funds. So it means that there is very little institutional risk because your funds are ring fenced for any liability. And then also the main benefits is the tax benefits. So this type of account, if you open this account, in the first 5 years, any income will be taxed at 28%. But after that is when you start to see real reductions. You get a 20% reduction in your capital gains tax after 5 years. And then after 8 years, you can reduce your capital gains down by 60% to an effective rate of 11.2%. Yeah, it's one of the most popular structures among expats. It also means that if you have an investment strategy, let's say back in your home country, but that structure is no longer suited, as long as it's European compliant, the underlying assets, you can restructure the assets within this type of investment. So you get basically a 60% reduction on your tax, and it ties in pretty well with the end of NHR as well. If anyone's on here that was lucky enough to get the old NHR, this ties in well with the end of that 10-year period. So yeah, there's a bit more information. I could sit and talk about these sort of investment structures for quite a while, but I won't go into too much more detail. If you are exploring or wanting to know further information on this, like I said, I'll include my details at the end. You can reach out to me on email or book a meeting in to speak with me directly, and we can review whether or not these type of structures are one suited, but also potentially beneficial for yourself. But I will touch on one thing before I move to the next slide. Unfortunately, they are not suited to US connected clients. That is one of the only nationalities that it's not suited for. Chris will go into that in a bit more detail later as to why that is. But unfortunately, this is all for non-US connected clients, but we will move on to strategies and options for US connected clients in a second. And then my last slide before I pass it over, because I've been doing quite a bit of talking on to Chris. This is a bit of a case study, just to give you a bit of an example of how that Portuguese compliance investment bond works. So you can see here that this is all hypothetical, but if you made an initial investment when you first moved to Portugal of 100,000 euros, after 8 years, that investment has grown by 50%. And throughout that 8 years, that means we could have bought and sold, changed strategies, reduced risk, raise the risk profile. That wouldn't trigger any tax liabilities because the money is staying within the bond. It's only when income is taken out that it's liable for tax. And then at the end of the 8-year period, let's say you wanted to start drawing an income from the investment? Well, this is how taxation works. So you can see here that the investment provider will establish on that withdrawal of 15,000, how much of that 15,000 is initial capital and how much is gain. So you can see here for this example that 2/3 is initial capital, 1/3 is gain, and then tax will only be payable at a 60% reduced rate on the gain element, which is then withheld and paid to the tax authorities on your behalf. So it makes administration, taxation as simplified as possible. And it's a fantastic tax saving strategy or tool for any expats. There's also one little tip before I pass it over, and not a lot of people know about this. It's a sort of unspoken or unheard of relief that they have in Portugal. If you do downsize your property in Portugal or sell a property altogether, you do have some reliefs available to you. You obviously can purchase a new property that can reduce your capital gains tax down as long as it's being reinvested into a property in the EU or Portugal. But also, if you reinvest some of the funds or all of the funds into a long-term pension plan or a Portuguese compliant bond, which ticks these boxes and is accepted under law, that you can reduce your capital gains tax down by investing the proceeds or leftovers from downsizing or from the property sale into this type of structure, and you can completely reduce your taxes down. But this needs to be done within 6 months of the sale, and it needs to be reinvested to generate an income, and you have to be over 65. So keep that in mind if you ever are downsizing or selling a property in Portugal. You can use these type of structures to reduce any tax payable. So it's a highly tax efficient investment. If you have any questions, drop that in at the end, or reach out to me on email or book a meeting in to speak with me. Felt like I've been talking for quite a while there, so what I'm going to do is take a sip of water, pass it over, and let the other go. Oh, one more slide, actually. I've just included this.
Oh, he's
before
teasing
I
us,
have a
Chris,
sip
isn't
of
he?
water. Yeah, sorry. Recent survey showed that only 20% of NHR holders are prepared or planning for the end of their NHR period. I think a lot of us are quite sort of not bury our heads in the sand, but don't think about it too much while you're under this favorable tax regime. But once you're out of it, things are going to change and change considerably, and you're going to fall into the normal tax rates here in Portugal. So if you can plan, and like I said, if with the Portuguese compliant bond, that could reduce your taxes down, it works hand in hand. But I just thought that was pretty interesting that only 27% of people are prepared. Now I'm done. I can pass it over to you now, Chris. Thank you. Cheers, Carl.
Okay. Thank you, Henry. Over to you, Chris.
Yeah, thanks, Henry. Very, very helpful as usual. Hi, everyone. It's great to be here again at another Expats Portugal event. It's probably fourth or fifth one of these I've done, and yeah, always interesting. Just a bit of background to myself. Obviously, my name's Chris. I work for a company called LGT Wealth Management US. We are an investment management house, but specifically providing advice to US connected individuals. We established the business back in 2012 after a bit of legislation change in the US called FATCA, which, if you don't know it by now, you certainly will do when and if you come to Europe. But effectively, it was just a bit of a shift in terms of the burden of reporting or tax reporting. So, and I'll come on to it, but a lot of other firms, big banks, around Europe could no longer provide investment management advice to US taxpayers, and so we explored the area of establishing a firm to specialise in predominantly US taxpayers residing in Europe. So I'm actually based in London. Obviously, Henry's in Portugal. I saw Henry. It was great to see Henry last week in person. It's very, very handy to be on the same time zone with our clients as well, and that's certainly something to consider when choosing advisors, whether it's sort of wealth managers or any sort of devices that you're using. Obviously, it's the time zone in Europe is different. But what I'm going to go through today is just sort of some of the common issues that we see when people come to Europe that are US taxpayers. And I've got a bit of a case study later on where I'll go through again a very typical scenario of a client that's come over to Portugal under NHR, but it can be under any visa, and there's a bit of difficulty in what happens with their investments, whether it's in the US or in Europe. And David, I saw your question about currency, and I will totally cover that as well. So that's very much part of the case study. But really, look, the type of clients that we work with, they are anything that sort of looks, sounds, feels, smells American. So that can include sort of US citizens, green card holders, US residents, individuals born in the US, and also sort of trusts with US connected beneficiaries. And really, what the reason why we established this firm is pretty much, all of your worldwide assets are going to be continually subject to US taxation, no matter where you are in the world. So, Henry was talking about sort of the Portuguese investment bonds earlier. Now, they're great for non-US US taxpayers, but because that product would still be subject to US tax, it doesn't work quite so well. And so we just have to make sure that what we're doing from the planning side of things with Henry and myself on the investment management side of things, it really we have to make sure that it's tax efficient in both the US and wherever you reside in Europe, or across the globe, by the way. Myself and Henry have got clients mainly in Portugal, but across the world as well. So that's just sort of a bit of background in terms of the type of clients that we work with. Thank you, Henry.
No problem.
And here's the side about sort of the challenges that we see, and Henry has sort of alluded to it. A lot of it does come down to tax. Now we are not like Henry. I'm not a tax advisor or an accountant, but we very much have good knowledge on how investments are taxed in the US and in Portugal, and then Henry obviously on the sort of the planning side of things as well. But common issues that we typically see is down to some of the underlying investments that you might have in the US at the moment, or you might have in Europe as a US taxpayer. So one of the sort of big red flags that we see is fund-based investments. So again, this is very much linked to the Portuguese investment bond that Henry mentioned earlier. Now, most non-US based funds are going to be subject to what's known as a PFIC tax in the US. So a passive foreign investment company, they're called. Now, effectively, what that means is instead of any capital gains that are going to be subject to capital gains tax in the US, they're actually subject to income tax rates in the States. And therefore, you could end up paying a lot more than sort of the long-term capital gains rate or in the US than you're meant to. So you could be paying up to 37% tax instead of 20% tax, which clearly is going to make a bit of a difference in terms of the profitability of that investment. And therefore, we do have to be careful in terms of what we typically invest into. So keeping it quite simple, just say non-US listed funds are a bit of a no-go area if you're a taxpayer. What is suitable? Well, it's what I refer to as a sort of US compliant portfolio. Well, it's going to be very much US based funds. So ETFs. You're going to also include within that fixed income, so directly listed, US Treasuries or US corporate bonds, municipal bonds. Although actually municipal bonds are not really particularly efficient if you don't live in the US, and then also directly listed equities. So any equities listed on a major exchange is going to be taxed to qualifying rates in the States. And what I mean by that is your capital gains are going to be subject to capital gains tax. Your dividends are going to be subject to dividend tax. And that works in line with the double taxation agreement between Portuguese tax authority and the IRS in the US. So that's some of the kind of potential issues that we do come across quite often. Henry mentioned some of the different, tax wrappers that we see. He mentioned ISAs, previously, but you could also include, things like Roth IRAs, and we need to be careful of how they're taxed. In the US, it's been fairly popular over the last few years to convert your 401k or your IRA into a Roth account. Clearly, paying the tax up front in the US on the conversion, well, it might not be so suitable in Portugal, and so we just need to make sure that we are all aware of the potential tax issues there, and that's what myself, Henry, and clients' tax advisors are there to do. Some of the other anomalies that are different in Europe and in the US. Obviously, we're working on different currencies. You still have to file a tax return in the US in US dollars. So if you've got an investment held in Europe that's not really mindful of US tax, then they probably won't provide you with a full US compliant tax report, which is what we would do ourselves at LGT. As I say, clearly, there's different tax rules in the US, Portugal, or wherever else in Europe. You need to find an advisor that's going to be aware of long-term capital gains, short-term capital gains in the US, non-US sourced income, US sourced income, how they're going to be taxed in the US, and providing you get all of this correct, you won't be double taxed. You won't be subject to tax in Portugal and the US. You're most likely to be subject to tax in Portugal, depending on what obviously depending on what visa route you go down. But yeah, it's just making sure that your advisors are aware of those different rules. And then the final point on this slide is just regulatory issues. I thought I was going to go through this webinar without mentioning Mr. Trump, but we live in a world where there's ever-changing regulation. The world, in terms of kind of being a very happy, humble place, is changing, and you are moving in a scenario where there's sanctions on certain countries, certain investments, and a lot of the time we see investments that are bought by clients, Asia funds, for example. Well, you need to make sure that you aren't investing indirectly into a sanctioned company in China, for example. And so again, just making sure that you are working with the correct advisors, that will make sure that you're efficient from a regulatory perspective and a tax perspective. And I should say at this point, actually, we're fully regulated by the SEC, so we're authorised by that body, which effectively means that we can provide investment management advice to US clients, no matter where they reside in the world. Just before I touch on the case study, it's been an interesting period, clearly, over the last few weeks, 6 weeks or so. We've seen a large amount of inquiries coming from US individuals wanting to not only kind of move outside the US, but hold their assets outside of the US. And it's very, very interesting. I don't think it's likely to happen at all, but that their fear was that potentially Mr. Trump would change the regulation with US banks, and might not be so secure to hold your assets in the US. And it's something it's been a very, very interesting time talking to clients about that. And I'm glad to say that we have both an investment portal in the US. So we use a platform over in the US called Broadband for Canada. it is based in the US, despite the name. And then we've got an agreement with Interactive Broker as well in the US for accounts such as 401ks, IRAs, Roth accounts, etc., brokerage accounts. But we also have a London-based platform, which is clearly outside the US and does sometimes resolve some fears about kind of the volatility we're seeing with the new government. So it's been a very very interesting time, it's finding the opportunities. So Henry, now on to the case study, please.
Case study.
Thank you very much. And look, as Carl mentioned, keep your questions coming in. We will answer them all at the end. I won't be whittling on for too much longer. You'll be here, glad to hear. So this is a very, very typical, client that we see. Two individuals that used to reside in the States. They're planning to move to Portugal. Henry mentioned it earlier. Look, it's always best to pre-plan. He mentioned just on the tax side of things, you just want to make sure that once you set foot in Portugal and you've got your visa and set everything up, you need to make sure that your investments, your wealth plan is suitable for Portugal and the different tax authority there. But back to this case, they've got children and grandchildren remaining in the US. They are one of the lucky ones that took advantage of NHR 1. I know there's a new version out. They are fully retired and they plan to travel the world, and in particular travel around Europe. So Henry, if you could move on to the next slide, please.
Yeah.
Thank you very much.
No worries.
They both have 401ks in the US from obviously workplace schemes. Mr. Washington has got an IRA. There's some brokerage accounts. They've obviously got their full Social Security, and they're both taking that Social Security payment at the moment. They've got US life insurance policy, and they've bought a house in Portugal as well. So this is very, very typical of what we see. And going on to the sort of next slide, you'll see the potential issues they have, and this is where I'll come on to talking about currency and the impact of what we've seen. The dollar has fallen over the past sort of few months. I think that's probably part of Mr. Trump's plan to devalue the dollar to make it more attractive for some of the imports that exports coming out of the US. And we may see that continue to fall, the dollar. Now, what we always say, myself and Henry, that is look, if you've got liabilities in euros or non-US dollars, then sometimes you want to match up some of your liabilities with your assets, particularly if you're taking an income from your investments. And so, if you do have an element of your portfolios, your investment accounts invested into euros, then you aren't subject to, or you aren't subject to the currency volatility between the dollar and the euros, because you're already holding euros. And so hopefully that explains your question, David. But and that's what we see all the time. The US is very kind of US centric. You're going to be investing into a dollar portfolio, and you're going to have very little exposure to elsewhere in the world. And so this is where we try and come in and diversify across geographies and currencies. I spoke about it earlier. A lot of US banks, wealth management houses, will not have the required licenses to provide investment advice and planning advice in Europe. And look, fair play to them. We see it quite often with big institutions, Wells Fargo, Merrill Lynch, Northwestern. We see this regularly, where as soon as you change your address from the US to a non-US based address, they'll unfortunately have to say, we can no longer provide you with management advice, investment management advice, because you're not a US resident. And at that point, what you don't really want is for your investments to be sold down and a check to be sent to you. You need to find a solution pretty quickly. So there's the potential risk here of being exited by a US provider.
Can I say something, Chris, there?
Of course,
Sorry, just
yes.
to jump in. I've had this twice in the last 2 weeks of clients who were told initially that their advisors in the US would be able to support them and continue to help them. Then when they went back with further questions, it actually turned out that they didn't have the correct setup to provide that ongoing advice, and it would have put them in a much worse off position if they would have left it and then found out once they were abroad without pre-planning. So yeah, I think they may even say, yeah, we can help you, but when you start asking questions about understanding of taxation in Portugal, like you said, PFICs as well, I think then it comes to light that maybe they aren't suited, or it's a possibility to provide that advice.
Yeah, absolutely. It's a very common issue. There's no, as I said, there's no kind of euro exposure within the portfolios at the moment. They've got multiple, providers of assets, and they're not consolidated at the moment. I mentioned the time zone earlier, but it can be difficult working with a US-based firm when you're in Europe. Obviously, you're 5 hours behind in terms of the East Coast in the US, and even further if you've got an advisor on the West Coast. And we often see that social security payments are not set up, or not going to the right bank account, etc. What this client wants to achieve is effectively provide a tax efficient portfolio, providing income streams in euros and US dollars for when they're traveling. They want to diversify across currency geographies, and they want inflation, in fact, adjusted growth of the consolidated portfolios. Next slide, please, Henry.
Yeah, sorry.
No problem.
There we go.
So this is where we come in and provide a solution along with Henry. We work with Henry and his team on the ground in Europe to provide localized advice. And Henry mentioned it a few times. It's crucial to provide a local, to find a local advisor. Henry can work with, provide assistance on visa routes, him and his team at Holborn. And we go through a full kind of risk planning and suitability advice. We also assist with the consolidation of 401ks and IRAs, just to make sure that you don't have the difficulty of working with multiple advisors. On the investment management side of things, obviously we provide a fully US compliant portfolio. What I mean by that is the portfolio is tax compliant and regulatory, or it's compliant from a regulatory perspective in the US and Portugal too. We set up the minimum distributions at the age of 73 or before that if required. There's obviously no threat of being exited by a US bank, because the companies we work with and ourselves are have been working with US people for a long time, and we will continue to do that. We're going to be providing diversification across geographies and asset classes, and the addition of euro investments. So whether that's kind of bonds invested into via European bonds in euros, or equity investments that are euro based as well. Clearly, as with most firms, you'll have access to online portals and app to view all of your accounts in one place. In terms of the final point is in terms of the tax efficiencies. Well, we are going to make sure that we are avoiding PFICs, and we're going to be providing US tax reports on an annual basis, and we're very proud to say that we've got the best in the business in terms of the tax reports. And what we've heard in the past is it saves clients a lot of time and a lot of money, in terms of the fact that their accountant's going to spend less time filing their return, because it's all very, very straightforward within a tax report. So yeah. So
Sorry,
Henry,
decode PFIX there? What's that
sorry.
acronym?
Yeah, so it stands, it's an acronym, and it stands for Passive Foreign Investment Companies.
Thank you.
So that's sort of, you know, the non-US based fund that I was talking about. You know, your typical kind of European-based advisor, if they don't have too much knowledge on how US tax works, they will probably put you into a fund-based solution, whether that's investing into sort of a Dublin-based or a Luxembourg-based fund. Yeah. And it's going to be a pretty torturous time with tax going forward if that happens. So we avoid those.
Thank you.
Yeah. Yeah, well, look, that's oh, there you go, Henry. Back over to you.
Ta-da!
Ta-da! That's the QR code. No, thank you very much, Chris. That's really informative. So, just to sort of give a sort of recap on how the two of us work in partnership. My role as a financial planner is to work with potentially yourself or my clients to put together a financial plan, whether that's short-term, medium-term, and long-term goals. We then look at your assets and we look at sort of cash flow analysis, risk tolerance questionnaires, and then we put a plan together. And that's where Chris comes in to design a strategy or a portfolio that suits your individual requirements. And then we all work three ways in a partnership together. So yeah, if anyone, I know we have some questions, we can jump onto them, but if anyone has any sort of personal questions or would like to run over your sort of personal situation, please scan the QR code. I hope it works now, and I hope it hasn't expired or anything like that. That should go straight through to my Calendly. You can book a meeting with me or drop me an email, or I've got a new website set up as well, my own personal website, so you can visit on there and read up a bit of information about myself and everything that we've covered today. Thank you.
Great. Thank you, Henry and Chris, this evening. There are questions that we can go into. I think I'm going through to your Calendly now. I will test that. I think it's fine. So thank you to Henry, to Chris, and Henry's QR code this evening. Kurt was first in. I mean, some of these are tax questions, and you were clear earlier on to make sure that goes to a tax professional. But you might want to comment in addition as well. You may not. I am interested to find out what roughly my Portuguese tax liability will be. All of my income will come from US social security benefits. I will be a resident of Portugal as of May 2025. Well, congratulations, Kurt, on that, on becoming a resident, May 2025. Do you want to say anything on that, or is that the same advice to refer to Pedro Branco of EI, for example, and have a conversation with Pedro? Okay,
definitely revert to them. We do have a free Portugal tax guide that is available if you would like that, but it is very generalized and the majority of the information is online. But if you want that, drop me an email and I'll feel free to send that over.
There you go. Thank you, Henry. David asks, are there tax brackets in Portugal like the US? If so, what are the brackets? It's a progressive tax system here. And again, to find out what you're up against, that would be going to Pedro Branco again on that. And I'm sure we'll have a specific seminar with Pedro in due course as well. So watch out for that on the webinar listings and schedule. If you have your own business, Constance asks, what do you advise? That's interesting, isn't it? I mean, and that would come in, I guess, to the asset generation or the profit generation, and then that comes into your world, Chris. But generally speaking, what do you say to people who are running their own businesses?
It depends on what they're planning on doing. What do they want to do with that business? Are they looking? Do they have capital? Are they? Yeah, it's quite a vague question there.
Okay, so that would be part of your fact find, getting to know the client could include that. So yeah, to open up on that, Constance, and talk about it and what your intentions would be with the business.
Yeah, exactly. That would help.
Okay. You did mention this, Chris. How are US Roth IRAs and Roth 401ks treated? Do you want to come back to that for John?
Yeah, absolutely. Yeah. So ultimately, it depends on what visa you are, going into Portugal on. But
tax regime.
Yeah, exactly. Which regime? Thank you, Henry. But in effect, actually, much like in the US, your Roth account should be tax free, both from a capital gains perspective and an income tax perspective if you're withdrawing capital from those accounts. So as I said, it's been very, very common for clients to convert their IRAs, 401ks into Roth accounts, and it's quite tax efficient to do that.
Great, thank you. For you there, John. To Eugene, who is coming on a D7, or as a possible D7, USA expat in Portugal. I understand I'll have a USA tax liability on my pension and social security income. How will Portugal residency affect my tax liability? Do you handle both my Portugal and USA taxes? Again, a referral, I think, to Pedro. And likelihood will be that you will have a USA tax representative and a Portuguese one. They don't tend to be in a hybrid tax expert yet anyway. So people tend to have both sides of the water representation, and Pedro offers a three-way call to get all the joined up thinking going on with what you need there. Am I right in adding that, Henry and Chris? Do you want to add anything further to that?
Agreed
Okay.
with you on there, yeah.
All right, David, I think you addressed David's question with alternative currencies, other currencies. Thank you, David. Thank you, Chris, on that. Another David in the chat, David F. My US advisor has talked to me about exiting and can continue to do business with me if I set up a virtual address through a provider. I think that's a statement more than a question there. Do you have a comment on that, however, virtual addresses and any risks with that?
I've never seen it before. It's quite interesting. I mean, look, absolutely. If you've got a really good relationship with that advisor, and they can continue to manage that plan, that investment, then go for it. Just make sure that they're aware of kind of what happens in Portugal. Make sure that you've got relevant tax reporting set up as well. So it's not just the fact that we can, from a regulatory commission, assist, but it's also we've got the local knowledge too.
Yeah, okay, great. And like with other things in life, there's no harm in perhaps getting a second opinion. Jeannie, good to see you here, coming over on the D7. I will be living on military retirement plus my social security and a small amount of savings. Plan to sell my condo before coming over. I'm pushing through, even though the ground seems to be shifting daily in the US. So you have our sympathies, and Chris obviously has referred to that situation. Is this a good plan, would you say? I don't think you're giving professional advice. Would you give an opinion or other people in this situation kind of view on that, Henry?
I would say it goes back to the key essential tips before. As long as you've budgeted and you've understood and compared against income to outgoings, and it's you can afford it, essentially, it's feasible, then highly recommend, definitely do it.
All right, there you go. Thanks, Henry, for Jeannie there. Anonymous attendee, my assets are all in the US IRA, and that is under management by a USA firm that I'm happy with. If moving it over, would I have to pay the US IRA tax on the entire amount, as it would be an entire withdrawal? Do you have a view on that?
Yeah, so the IRA would stay in place, so there wouldn't be any sort of immediate taxation. You'd just be subject to taxation when you withdraw any sort of income from that plan. So yeah, a common query we get asked: do I have to sell down all of my assets? Absolutely not. We want to assist with the sort of tax side of things and make sure that you are in the savings plans, the tax efficient wrappers that you've invested via. So yeah, short answer is you wouldn't have to pay the tax on the entire amount.
Okay, I'll come back to your question. So thank you from Jeannie. Thanks for that. And Catherine's question is an important one. I'll come back to that. For financial planning from David F. For financial planning, is a US federal retirement account, a TSP, looked at the same as a 401k? I'm not sure if you covered that.
I believe so, yes.
Okay.
It is treated the same.
All right. Continuing to advise clients through my law firm. That's the business spouse on a D7. I think the same answer applies, Constance. I guess it's what the business is generating and how that would be dealt with should you continue to run that, and what the tax implications are with the tax expert from the asset management point of view. Have the conversation, I would say, with Henry and start that dialogue. And finally, then, if there are no further questions in the chat, let's go to Catherine's question. A minimum portfolio to get support. What sort of clients are you looking for, and is there a minimum portfolio?
It depends. It doesn't necessarily come down to a minimum per se. It's more whether or not our services are going to be of any relevance or benefit to your particular situation. So yes, it completely comes down to whether or not it's worthwhile, it's suited to work with ourselves. So not a minimum per se, no.
Okay, and there's one good way to find that out, which would be to hold your camera up and behold Henry's QR code there. Or if you prefer the old-fashioned way of getting in touch, you can see all the details on the screen. It does work there, so excellent stuff. That QR code is working, and you can book an appointment over Calendly with Henry there if you'd like to do that, to discuss anything further with him and with Chris. So thank you both this evening, Henry in Portugal, Chris in the UK. Great to see you again. Is there anything you'd like to say as a final word this evening?
I'd just like to say thank you very much for having us once again, or myself. It's always a pleasure to speak with yourself, Carl, and speak for Expats Portugal. And it's a pleasure working with your team and you guys.
Great, and it's lovely to see you networking with some of the people you work with at the Coimbra. It's really good to meet people in person, and there will be further opportunities to do that, I'm sure. I know you're not free for the next one, but maybe yes, Tavira I think is the one you can't come to, but
Yeah,
another opportunity to explore Portugal, Henry. I get Casa Kent coming over and seeing another side of Portugal, and we look forward to seeing you in person. So thanks again. Astrid, anything to add? We've got the town hall coming up, of course, in about 30 minutes.
No, Carl, I think that was a fantastic presentation. So I was fully, very, very comprehensive, and a lot of details there that I didn't know. So very, very good. But no, that's it. We've got Philomena next week at 7:30. And of course the premium members lounge after that. But tonight we've got the dream team, so we'll see you in half an hour.
We will see you then. Thanks very much for being here, everybody who attended as well. And the video will go up on the YouTube channel of Expats Portugal. So it's quite rich in information. If there was something you missed or you wanted to review, you can do that soon on the Expats Portugal YouTube channel. I think Henry's got the red button.
Cheers, guys. See you later.
Thanks,
Thanks, Chris.
Take care.
All the best. Bye-bye.
Thank you. Bye.